Hey everyone, me Kevin here. We need to talk about Jerome Powell because he gives us a surprise potential rugging tomorrow at 1:55 p.m. Eastern Time. So be prepared for a speech from Powell, which of course I'll be live streaming, but I think what's very important is setting up a strategy going into this meeting, especially if you want to be able to identify the hints that Powell drops. Just note that before that at 8:50 a.m., so while we're live at the Meet Kevin Market live channel, free live streams I do every morning on the market, while we're live here, we are going to be getting Michelle Bowman, though I don't really think anybody cares what she says because she was the one dissenting vote that wanted to go 25 and everybody else went for a 50 at the last meeting. So we kind of already know she's a bit of a hawk. Economy's fine, there's more of an inflation risk, blah, 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 blah. We kind of already know what she's going to say. But last week on Thursday, when we had Powell on a calendar, he didn't talk about macro or, frankly, he didn't talk about monetary policy at all. And this came as a little bit of a surprise, potentially because he was waiting for some leaks and some pre-data leaks this week, since this week is jobs week, and who knows, maybe he's got a little heads up for us in terms of what the jobs data is going to be. Now, also in fairness, the earliest I've ever heard that Jerome Powell would get a data leak would be like the night before or 2 nights before. So 5 nights before the Friday jobs report, maybe less likely. But let's come up with some scenarios first of what we think Jerome Powell might say, and that way we could be prepared when that happens to either trade on that news right away or to position a long-term portfolio appropriately in case there's a warning or a big old thumbs up to keep the rally going. Okay, great. So let's analyze first, because this is going to help us understand this analysis. We have to first understand what happened the last time. Okay, the last FOMC meeting, I made a prediction that we were going to get a 50 basis point cut. However, I also said that if we were to get a 25 basis point cut, it would come with a dovish Powell. And if we get a 50, it would come with a hawkish Powell. Now, an example of a dovish Powell would be, hey, look, we're going 25, but we're leaving 50 on the table for the next meeting, especially if we see any kind of continued weakness in jobs. We are ready. We might even go 75. You know, like that's an example of being really, really dovish and being willing to react really rapidly. This did not happen, though. We actually ended up getting a 50, and it was a hawkish 50. We literally got quotes which were almost the opposite of what we saw at Jackson Hole. Jackson Hole was like, we seek no further weakening in the labor market. The Fed meeting, Jay Powell's like, yep, everything's fine. He literally said those words. Everything is fine. The economy is fine. The economy is doing great. GDP is strong. Inflation is falling. And we're just preemptively cutting, not because we're behind, but because we don't want to fall behind. Well, a lot of people think Powell is behind. So let's now predict what we end up getting tomorrow. Keep in mind, we did get this 50. We did get the hawkish 50, so I was right about the 50, but I will tell you I was wrong, and this will lead into this next piece as well. I was wrong about the direction that yields would go for bonds. Honestly, I thought because there was only about a 55% chance that we would end up getting the Fed going 50, and I was leaning towards that 50, I thought that bond yields would go down when we got a 50. But they didn't go down because Powell was so hawkish, bond yields actually went up. Which is interesting because when yields go up, they do something known as tightening monetary conditions. They tighten financial conditions. So if Powell's wanting to loosen, but his actions actually led to tightening, then maybe there's a chance he could undo some of that tightening tomorrow. And this is where we'll want to begin to speculate on, okay, what is Powell going to do tomorrow? So let's think about this together. First, I want you to think to yourself, while you look at this beautiful black screen here, what do you think he's going to say tomorrow? Is he going to be hawkish, or is he going to be dovish? Or are we just not going to get anything useful out of him? I don't know, any of those things are possibilities, but I'm going to give you what I think are the most likely possibilities. Likelihood number 1, I actually think that you're going to get a humble dove. See, the cool thing here is Powell can go back to his dovish self without having to feel like he's doing a favor for anybody at the meeting. See, he got almost everybody to vote with his 50, Probably because he said, look, give me the 50, I'll go up there and hawk. And then that way the hawks who are left on the board are like, all right, 50, Andy's going to go hawk? All right, and he hawked to us. But I think he overdid it. And I think he realizes, I think markets are like, bro, you just tightened things. It's like you went too hawkish. So I actually think tomorrow we're going to get a humble dove. A humble dove is going to be in contrast to a hawk tua dove. Whatever, Powell. I can't spell it correctly, but you know what I mean. So a hawkish Powell is a possibility, but let's break through what some of these things could look like. So first of all, a hawkish Powell might look like, hey, look, the Atlanta Fed GDP report is at 1.3%. This is great news. Hey, the personal savings rate, which was previously thought to be low, was revised away. Wow, this is great news. Yeah, there's some issues with restaurants and temporary job openings and job openings in general and construction job openings, and ISMs are running low and manufacturing's not doing that great, and we're potentially going into what's called a growth recession where growth begins to operate below trend, but we're not seeing that yet, and we're ready to cut if we need to. But otherwise, I don't think he'll actually say the word soft landing, but he'll basically imply we're going towards a soft landing, or frankly, he might even go as far as saying we might have no landing at all. You know, there have been no landings in the past. The only reason people think the odds of a soft landing or no landing are basically zero is because we've really never gone from this deep in the inverted yield curve down like 101 basis points. Certainly not since the 80s. But every time you come up from inverted to positive, which is where we are now, about 20 basis points, you don't actually have a recession right away. You only have a recession when the yield curve goes between 50 to about 90 basis points positive. So if you look back at 2007 or 2001, this is when the recession was triggered, when you were this uninverted. We're about right here, which potentially means we're within about 2 months of a recession, but I suppose there's a chance this whole curve is just wrong, this time is different, and there won't be a recession. See, the problem with recessions, which makes them extremely hard to predict, is recessions come all at once. Really, you have to think about this for a moment. If everybody's sort of like, everything's fine, there's no recession, there's no recession, there's no recession, then you're not actually laying people off, and so you don't actually see bad jobs numbers, and you don't actually see earnings go down. But if for some reason something tips over and the tightening was just too much, we get a certain company that goes bankrupt or a black swan or there's a market crash or whatever, then you could actually very rapidly, in the span of frankly a week or two, tip the economy into what actually looks substantially more like a recession. And then you get layoffs, the job loss, the decline in earnings. This all happens very rapidly, which makes it extremely difficult to predict. Which is why I think Jerome Powell's yapping tomorrow is going to be important, because he might give us some hints in terms of what he's seeing in leading indicators from discussions with businesses on potentially layoffs coming, job hits, or potentially also what he sees in the way of black swans. And so how he behaves tomorrow is going to be his, I like to say, his natural self. We'll have an unrestrained Powell. He's not subject to the whims of the rest of the board tomorrow. So if we get an FOMC Powell, it's worth noting you'll probably see stocks up and you'll probably see yields up as well. So in other words, bonds might lose value, stocks, Bitcoin, and otherwise might go up. And if you're looking for things to go down because you want to buy the dip or whatever, maybe on the JOLTS report this week, the ADP unemployment report, or the jobs report on Friday, you'll actually have a chance to buy the dip. Maybe. Or who knows, maybe there'll be a dip before the election, or it'll just never dip and it'll just keep going to the moon and the valuations will keep being as extreme as they are. And this is potentially a blow off the top moment. Who knows? Anyway, so the other option is we get a humble dove. So this is where I actually think we're more likely to get Powell. So this is, I'm going to just make it really clear, Kevin's opinion, okay? So here's what a humble Powell looks like. A humble Powell acknowledges these wins, right? So we're going to get the acknowledgement of good, okay? But the problem is you're not going to keep things at that level. So, think about jobs for a moment. Jobs go up, they start turning down. If you're trying to stay at this level and you're trying to put a floor under that level to prevent things from continuing to go down, you have to be really, really aggressive. So you could cheer where you sit right now, but you don't want to declare this victory so early and then get complacent because the trend is down. And we all know in trading, the trend is your friend. So if he acknowledges the good, I know I spell my abbreviation weird here, but he makes an acknowledgement of the good. But what I actually think he's going to do is he's going to say, at this point, we actually want to see labor growth again. Okay, this is above where we are now. And that's because right now, labor growth sits somewhere around 150,000 jobs. But frankly, you probably have to take about 30 to 40% off of that. So we're probably sitting between 150 to 100 because we're going to get revisions again. The Bureau of Labor Statistics just isn't that good at figuring out right now how many jobs are being created because we're at a weird transition point in the economy. The problem is, once you go sub 50,000 jobs, which wouldn't actually be that far away with revision, you're in a recession. And so if you get a 100,000 read and then you revise down to 50, you're probably trending towards recession. People usually say it's when jobs go negative, but when you go below 50, you're so close to negative, you're probably going to get revised into a recession at that point. So people want to be careful with the sub 50 number. What Jay Powell should really hope for, if I were Jerome Powell, I'd be saying, what we'd really like is to actually stimulate the economy to generate jobs in excess of about 180,000 jobs again. Now, I don't think he's going to be this nuanced. He usually isn't. But what I'd encourage him to do is I'd say, look, we acknowledge the good, but we want labor growth to get back to a stable or growing level. We do not want it to weaken any further. And as a result, we are prepared with our policy to cut much more than what we forecast in our summary of economic projections, if necessary, to get us back to growth. So some kind of hint that we're going to cut more. That's what I want to walk away with a humble Powell. I almost said Dowell. Humble Powell, acknowledgement of good. We want to get labor growth. Focus back on labor growth again. Remember how good those PCE numbers were. They were excellent numbers. They really showed us on on an annualized basis based on the last 3 months, inflation's running at like 1.9%, which is substantially lower than what it was previously. And it's really indicative. Remember, on a 3-month annualized basis, you've ended up seeing inflation now running at about 1.4%, which is crazy low. A year ago, it was 3.5%, which means you've actually tightened situations in the economy by about another 190 basis points, minus the 50 they just cut, which means you just basically increased tightness by 140 basis points, 1.4%, over the last year by doing nothing. So this is Powell's opportunity. My take. This is Powell's chance right here before the election, because you don't have another Fed meeting coming up. You actually have a Fed blackout window coming up before the election, so they won't even be able to talk anymore unless they just Nikki leaks some stuff. But this is Powell's opportunity to do the following. Bring yields down. Okay, this is very important because this would actually encourage jobs and job growth because you're going to loosen financial conditions. Now, it is possible with that I don't think he has to be like dramatic, and I don't think the market will react dramatically where like stocks crash. And stocks are at a level now where it's okay if like a little bit comes out, a little air comes out of that balloon. But even if you get a little bit of sideways to a little bit of a down on stocks where you kind of stop like the potentially inflationary constant all-time high, right? You just stop that. Now what you're doing is you're creating stable high valuations, lower yields. You encourage jobs while potentially limiting the concern that stocks would lead to inflation. And you prevent the economy from going into a recession. This is important because if you keep coming across as Huck to Powell and you're like, everything's fine, we might not cut at all, that's fine. Stocks might keep going up just like they did in 2007. Remember, in 2007, for 6 weeks, so into early November, stocks went straight up to all-time highs in 2007. And then the very next year, they were down 53% because you had a Fed that was like, oh, everything's fine, everything's fine, everything's fine. Oh my gosh, everything's not fine. So I think Powell would be really smart to be a humble Powell here, a humble dove, but we'll see. So that's my take. If you found any of this helpful, consider getting some free stocks over at Webull. I think they're doing 75 free fractional shares. Metkevin.com/Webull. Go to metkevin.com/life to get life insurance in as little as 5 minutes. That's what Lauren and I use. Both of those are paid promotions, by the way. They're affiliates of the channel. So, but do check those out. I've got them linked down below as well. And folks, thank you so much for being here. I hope this is helpful. Happy Sunday, and we'll see you in the next one. Goodbye and good luck.